Hello everyone, welcome to the Ichimokucharts.com daily analysis for the SP 500 for Monday, March the 8th, 2010. Well, the change of character for the market today, and a very dramatic change compared to the previous day's trading. The previous day we had a very large green body candle, and that large green body candle denoted a very large amount of bullishness in the market for that day. That market even gapped up and created a window in candlestick terms, so that may be fairly significant for this market if it trades to the downside. On the previous day, the bulls closed in control, very strongly committed to taking this market higher. Today we have a doji type candle, and a doji is a sign of indecision in the market. We have a candle where the market basically opened and closed within the same area and failed to substantially move the market away from there. And that denotes that neither side made any progress on the day, neither the bulls nor the bears, so that could be fairly significant for the potential upside in this market. Having said that though, the market remains in a first time frame uptrend, and that is very important to this market. We have a candle with a higher high and a higher low, so we need to understand that the previous trend is in force until we have evidence otherwise, and evidence otherwise would be a lower high and a lower low. So we do need to wait for a potential reversal of this market. So confirmation of a reversal would initially be seen with the low of the current candle being taken out, and then potentially a candle with a lower high and a lower low. Now the market has also closed roughly around where the previous close was, and that denotes that neither side were keen to advance this market in either direction. So just reading what the short-term dynamics are telling us, it's telling us that the bulls have lost all of their strength, that they're failing to go on with taking this market higher, but by the same token, the bears are not showing any strength either, so that could be very important. Now, other than that though, the market has closed up above the 1133 region that we highlighted previously as an area of resistance and potential support, and the market has remained above there, so that obviously will be an important area if the market trades down into this very large candle. We need to read the short-term dynamics as the market does trade down to around that 1130 region, 1133 region, to see whether the bulls come back in to potentially trade the market back up past the 1140 area. If the bears are sufficiently strong to close the market down below there, then we do have potential for support between the second and third candles of the second and third last days, and that's what's called a window in candlestick terms, and that has the potential to provide support in this case. So it could be a very strong area for the market to find support. And we can also see from the shadows on these two previous candles here that there was strong downside price rejection as the market attempted to trade up through there. So there is potential for that to change its character and to provide support. Now the market is trading a fair way up above the cloud or the Kumo, and we did have the breakout up above the cloud, which means that the market has actually changed in an overall bullish mode. So when the market's trading up above the cloud, it's overall bullish, below the cloud bearish, and within the cloud neutral. So it's still a fairly bullish market, and we can see from the second time frame uptrend, we have a series of higher peaks and higher troughs, that the market is in a higher time frame uptrend as well as being in a first time frame uptrend, so that's fairly significant for this market. The market is trading up above the Tenkan-sen and Kijun-sen, and that's significant for the short term and medium term time frames. It's telling us that the market is trending up, that it's bullish, and that the market has some decent upside momentum because both of these indicators are pointing up, reflecting that upside momentum. Now if the market does come off, there is potential for the market to find support also down here around the cloud or the Kumo. It's a very thin cloud, so it will offer only a very small amount of support, but also potential for support at the Tenkan-sen and 1113, then potential support at the 1106 region, which was a significant area of both support and resistance, and then failing that down around the 1092 area where the Kijun-sen is. If all of that fails, then we have potential support down at the 1080 level. To the upside, we have potential resistance at around the 1150 region, and above there at the 1163 region, which we highlighted quite some time ago. So obviously for the next day's trading, the low of the current candle becomes important for a potential retracement of this first time frame and second time frame upswing that the market's in, but also for the potential for the market to continue on its way to trade up towards the resistance offered around the 1150 region. So we need to watch the high of the current candle as well.